Yeah, I sat here watching this market in the first 3 days. I know people that's been with me a long time says say, Tom, you're very disciplined how you will be patient these first 3 days. Well, it's not about just being disciplined. The fact of the matter is that you see the odds by waiting 3 days. Jonathan gives those numbers to you, and I want everybody that's listening to me to use those numbers because I'd rather play. Let me just ask you a question. If you can be let's just say 80% accurate, wouldn't you rather be 80% accurate than shooting bullets out there and killing a lot of soldiers? You know, no, you want to play when the odds are in your favor. And Jonathan had covered it when we get to the 3 day algo. But I'm sitting here with David, and we're showing things, and you know, it's a process. You got to learn this stuff, and when you learn this stuff, it just be it's so clear. Is what I'm trying to say. It's so clear. Uh,
Yeah, I agree. Definitely, the more knowledge you can put behind your fingertips, the better odds you have. It's knowledge is power. It always has been. And, knowledge alone is one thing, but putting some understanding in that. Now, we should also say there is a high degree of risk involved in trading, and we are responsible for the decisions we make. Past performance not indicative of future results. But obviously, I want to know what's going on. So, news shaping the market this morning. The government shutdown vote as early as today. I'm actually, trying to keep up with the news to see if that vote's going to happen. Most likely it will, and then we're going to kick the can down the road and wait a week or two before the next uh, political intercession in the market. But we'll see how it works out. But one thing the government shutdown has done, Tom, and this is kind of a big deal for us as traders, it's delayed BLS reporting, the Bureau of Labor and Statistics. We are not getting the employment situation report on Friday. I don't think we have a date when it's going to happen, but that will be delayed. So it changes the makeup of this week. We're going to see how that change affects the market. Probably going to be a Thursday, Friday issue more so than a Tuesday or Wednesday issue. Now, Tuesday, earnings. We've got tech earnings, Advanced Micro Devices, and Super Micro both reporting after the bell. And as there is a little bit of a talk around AI, that's going to be a big deal. And of course, pharma is always an interesting earnings week. We've got Merck, Pfizer, and Amgen all reporting after the bell today. And we are still developing the first 3 days of February, about almost halfway through. So we've got the first day under our belt. Second day, pretty much, staying as you would expect. I think one of the big things is when you're focused on those first 3 days. Like one of the big things for me, Tom, I remembered that 69.91.50 was the high of the first 3 days in January, and when I saw the S&P drop back below that, I said, "Oh, correction time." So I think if you understand where these numbers are coming from and what they could mean for the
yeah,
market, it gives you an
it's like a
advantage.
puzzle, Chuck. The way it
Exactly.
fits in.
Yeah, if A, then B,
Right.
and sometimes
Hey,
C.
here's some news on the government shutdown. There's an 82% chance they will pass what they need to pass today, and 82% chance. I got that from Couchy. And when Couchy does its, if you start seeing that drop, that means we're not going to get it fixed today. But there's a 92% chance it happens by tomorrow. So evidently, I guess depends on whether they get it done by midnight or not. But I follow Couchy as opposed to the regular news because I think it's better source. Looking at Couchy on the government shutdown, and so uh, 82% is not bad. That's pretty good odds to take. I'm
Yes.
so excited about today because today we're going to spend some time. I use Delta a lot, and I told Jonathan, I really would like a Rock'em Sock'em uh, study on Delta today because I think it's so, so important for you to understand that, especially if you get, if you get your hand caught in the a cookie jar like Friday when silver first time in 45 years uh, returned to 1980. Sort of it was like that. You got to know what to do. I noticed a lot of people that's been with me for a year or longer did quite well because I taught them on turning, turning lemons into lemonade. A lot of people's real new. We'll get there. And, but you got to go slow. And I always say this, don't overload your wagon. In other words, you got to have some room inside whatever risk you're taking. And that's a warning sign. Some can be so good, but it can have a bad day. Friday was a bad day. The other question I had was, why did I go flat? Because when I'm beat in the market, why do I need to waste any more time when I'm beat in the market? And when the market, dropped 37%, about 15% down, I said, I'm beat, closed the game. And you do a lot better doing it early rather than late when you recognize your beat. And I think people learn that, just how important it is to take action. People don't like taking losses. I don't like taking losses, but let me tell you, taking losses early is the key. And if it hits a parameter that you're not where the odds swing against you, you just got to say, screw this, I'm going on. And I do that because I do a lot better personally when that's not dragging over my head. Okay. Because I'll get the money back. And not only will I get the money back, I will charge them interest for taking our money. People heard me say that over the years, laugh when I said it. But you got to remember, okay, that's what you got to do. Okay. So it's a slow grind. We'll do that. And I'll do some bonus stuff too. Everybody knows that. That's the way I work. So there'll be some bonus here or there. When they're handing us money, I'll say, hey, this is a bonus trade. And Jonathan used the word bonus, meaning it's outside the strategy you probably signed up for, but it's time to make some money. Anyway, I just want to get that out there. That's my opinion. Now, what we're going to talk about today is here in Train and Trade is very closely what we're going to talk about is the delta. And I call it T-Buzz Delta because I do it a little different than most people with Delta. How it works, Delta works, especially if you're going to trade options. You got to become a master of Delta. Now, all trades that we do in here are tracked through T-Buzz Talk and Trade. That's our round the clock, what I would call way I can give you information when it's timely to help you. I can do that direct to you. And I like that. And I've got good help with Jonathan and Chuck posted. It's like a research lab inside of there. Now, Jonathan, take this over if you will, and let's go through the second day of the 3 days. We're halfway home.
All right, Tom, first 3 days. Let's make sure we have the correct 2-day high here. Just going to scroll over here and post in today's high and low numbers. And that will update our 2-day highs. So 2-day highs are set, or at least for the moment, until another high or new low is made. Add the current price. And we'll update the time. 11:12 a.m. Eastern time. All right, we're updated. The 2-day high so far in the S&P is 7,027. 2-day low is 68.64. We're about 100 points above the 2-day low, sitting at 69.67. And we're slightly above the midpoint of the 2 days so far, which is about one of our favorite numbers, 69.45, Tom, is the midpoint.
Right. And also we're above where we opened Sunday night, which is still positive.
And that would be the February open, 69.38.
And we're above January open. And so we're right on course. And this correction is probably a good sign for it to happen this early in the 3 days.
Let's see that. So that means tomorrow is the 3rd day of the month.
Absolutely.
We're going to be patient. We're going to stay patient. But you can kind of scroll through these and see. Once we're done, if you've never seen this sheet before, once the 3 days are done, I'll get rid of all these days that we don't need. They're just there to help us accumulate the data right now. And on Thursday, these two columns will shift all the way over to the left. And if the stock is above its first 3 days, the box under above FTD high for that stock will light up green and say long. Or if a stock or one of the futures is below the FTD low, it will light up, the box will light up red and say short. That's what will happen on Thursday once we're finished with the 3 days officially. And once the 3 days is officially done, these two boxes will change to say FTD high and low for first 3 days. And of course, once that's set, the 3 days, 3-day high, first 3-day high and low won't change again for the rest of the month once that is set. Any questions on this spreadsheet? I'll share the link.
I got one, Jonathan. I've got a lot of new people. Show them how they can keep this up to date. David wanted to hear that again, where he could, real simple to keep this updated and have the same numbers we're using.
This sheet does not change. I just shared the link in the Zoom chat. So make sure you click on the link or copy the link, however you need to get that on your computer, on your favorite web browser. And every web browser that I know of has a way to bookmark the page. On Google Chrome, there's a star at the top right I'm pointing to on the presentation slide here. If you click that blue star, you'll be able to bookmark it. And once you bookmark it, if I open up a new tab here on the browser, you'll see some bookmarks that I have across the top, not some, a ton of them. And just make a space for the FTD spreadsheet, however you like, so you know how to get back to it every day. You can even right click on the bookmark, top row, I guess, and create a folder if you want to create a folder to keep, a little bit more organized. I've done that here with several of those folders, but that's how you do it. Great little feature
Got
of the
one
web browser.
question real quick that came up. The numbers, this is your motivation for keeping up with this. What is the percentage if it goes above, and you can use the SPY to give us the numbers. If the SPY goes above, which means 75% of all stocks will move with the SPY and E-mini, what is the percentage that stock or ticker will be up for the month?
We studied the market over the past 5 years, so December of 2025 on back to January of, I guess it was 2021 or 2020, whatever the 5 years was. And 87% of the time, if the SPY any day of the month opens above its first 3-day highs, there's an 87% chance that the month ends positive. And that's the type of odds we want to put on our side, isn't it, Tom?
Yeah, it really is. And, folks, I tell people, say, Tom, how accurate? When I meet people, say, how accurate are you? I say I'm about right 4 out of 5 times. I've done it for years, about 4 out of 5 times. So I'm striving like you are to get to 87%. That must be the emotions and everything else that goes into it. But this thing is a must have for everybody that's listening. Nothing is this good out there. I've been doing this for a long time, folks. Learn these numbers, learn how it fits in. It's a step-by-step approach to making money each and every month you're in the market, which is worth a fortune to you. And I think that if you got the right tools, MTI by DTI, you've got the roadmap software, and learn that, before you really put heavy money on the line, you're going to find out your results will show. I've got people here been with me a lot of years, and they tell me emphasize those two things about the roadmap software and MTI, because it's very valuable to you to start out on the right foot before you go lose money. Think you heard something. Let the numbers prove it to you. Okay. Like I was all set today in E-mini to go long above 70.25. I had everything set up. I was going to load the boat. But guess what happened? On the way to the bank, it didn't get higher than 70.25. It stayed there. And I said, well, heck with that. Where else can I make money? Okay. So I looked at, some things that were above its high and moving higher and sort of went there. And that's what the next subject's about. It's using delta to make option choices that will make you money. So, Jonathan, won't you take it away and teach that? I want to listen to it, make sure it covers everything. But clearly, if you like options, you want to learn about T-Buzz Delta.
All right, just getting slides for today reposted, and the second link is the FTD spreadsheet. Some more resources for you on the slides. This is slide number 8 on the slide deck. Tom's first book called Winning the Day Trading Game. It's not really about day trading. Some of the chapters are, but it's more about big picture thinking of how to view the markets and learning Tom's methodology from square one. Then you have the DTI white paper booklet. The first 3 there are the most important. Teaches you about the 7 sisters, which start with the S&P 500, of course, and then other key futures markets. Then it goes on to learning pivots, so you can understand how to use Tom's daily pivot. And then, of course, the DTI reference bar white paper, which will teach you the beginnings, the groundwork of understanding time of day and how to trade intraday, which is pretty pivotal to everything. Pivotal, if I can say that word, to everything we do here at DTI. Tom's YouTube page, you can click there or go to dtitrader.com/YouTube. When you're there, if you click on the live tab, you can catch the recording of today's session and then recording of any session that Tom does on YouTube. So it's dtitrader.com/YouTube. Go to the live tab to find the recordings. Make sure you like and subscribe to the channel if you enjoy the content. We'd appreciate that. There's an important terms to know document there that's pretty good, especially for new options traders. And then not related to DTI, but a fantastic resource on options. It's called optionsplaybook.com. Make sure you check that out. All right, today's topic is about Delta strategies. Delta, one of the basics of it, tells us roughly how much an option price will change when the underlying stock moves by $1. All right. Delta tells us roughly how much an option price will change when the underlying stock moves by $1. Either way. So let's talk about adding Delta to your platform. Every platform has it. We're going to cover Thinkorswim from Schwab and tastytrade. Here's Schwab. Lots of little boxes on the screen. I tried to color code them all. Of course, to get to the option chain on TOS, you got to go to the trade tab across the very top. And from the second row of tabs, you got to click on all products. Everybody probably knows that, but there it is in orange. Down the way, you may or may not know this, but where it says spread, it's usually on single, but some people use that to build a strategy for option spreads. Anyhow, to see delta, the true delta of an outright option, make sure you change that to single. Then you click the box out to the right, and you can see you get a drop down here, and you can choose the selection for option Greeks, and that'll get you delta on your data points there on the option chain. That's Thinkorswim. That's kind of probably the most common way of adding it to Thinkorswim. You can also just change one of the data points on your option chain to just be delta. Like if you wanted to keep the open price or the high price or the low price, you can just change one to delta. And that works the same exact way as it works over on tastytrade. So let's show you tastytrade. On tastytrade, of course, you get to the option chain. And across the top of the option chain on tastytrade, you have these data points that have little dots next to them. And those are the ones that can be changed. Notice the bid and the ask over here, they don't have that little dot out to the right? It's not there. You can't change those. But any choice that has a little dot out to the left, you can change those. When you click on one, you get a drop down, and you can choose delta from the list drop down list. So very, very simple to add it to your platform once you know where to look. Now, delta is marked as positive on the call side of the option chain. You'll notice that if you add delta to your option chain, delta is marked as positive on the call side. What positive delta exposure means you make money as the underlying stock moves higher. All right, that's what positive delta means. And we're going to use the word exposure when we're talking about delta. So are you on the positive side of delta, or are you on the negative side of delta? All right, if you buy a call option, you are long delta. All right, This might be confusing right now, but it'll make sense over time. If you buy a call option, which remember calls are marked as a positive delta. If you add a call option long, then you have positive delta exposure. You're long delta. If you sell a call option, you're going short, right? If you go short a call option, you have short delta. Does that make sense, everybody? This is the basics of delta exposure. It's very, very important to understand. If you're confused right now, just let me know. We'll talk through it. Wendy's got it. Okay, thanks for chiming in, Wendy. So that's the call side. Let's talk about the put side, of course. If the calls were marked positive, puts are always the opposite, right? So puts are marked negative on your platform. You can kind of see that hopefully on the graphic there. Negative delta exposure means you make money as the underlying stock moves lower. All right. So we're taking concepts that you probably already know. Buy a call, you make money as the market goes up, or buy a put, and you make money as the market go down. And now we're relating it to delta exposure. Everybody good?
Give us a yes if you understand this point. This is the key point you have to understand.
All right. Thanks for chiming in. Thanks, Tom. Bunch of yeses, no nos. So we got it. There's the slides again. So here's the same type of slide we did for calls, but we're doing it for puts. Remember, it's all the opposite. If you buy a put option, you are short delta. All right, because puts are negative. If you buy it, you're short delta. But if you sell it, now you're long delta. So you buy a put, you got a short delta exposure, you make money as the market goes down. You sell a put, which is a bullish strategy to sell a put. Now you're long delta, you make money as the market goes up. All right. Now let's talk about 50 delta strategy. It pays you roughly 50 cents for every $1 move in the underlying stock. And usually the 50 delta strikes are at the money. They're, if the stock is trading at 100, the 100 strike are the 50 deltas. Now on the call side, it'll be marked as a positive 50. All right. On the put side, it'll be marked as a negative 50. But either way, that option is going to move roughly 50 cents for every 1 point move in the underlying. So if you had a 50 delta call and the underlying stock goes up by $1, that 50 delta call option is going to increase in price by roughly 50 cents. Right? Or if the stock moves the other way, if it moves down $1, still that 50 delta call option is going to move down roughly 50 cents this time. So you got the relationship there. All right. There's a simple hedge you can do with options. All right. Shares of stock, one share of stock is one delta exposure, and most people buy it in 100 lots, right? So 100 shares of stock is the same thing as having a 100 delta exposure long. A very simple hedge you can use with options. If you buy 2 of the delta 50 put options, that will protect your 100 shares of long stock. So look at the math down here at the bottom. 2 times the negative 50 delta equals a negative 100 delta option position. And if you just compare that to 100 long shares of stock, a negative 100 delta option position plus a 100 delta stock position, you've got a delta neutral strategy. You're now protected. Does everybody understand that?
Yeah, and a mental picture, if you remember the old seesaw, a mental picture is you're at that level when you got a positive 100 delta and negative 100 delta, regardless of which direction it goes, it's going to give and take, and you're going to stay balanced there. So it's a good way to freeze your account if you don't know what if you don't know what the trend's doing.
So that's the basics of what, using 50 delta as a hedge can do for you. Well, let's go to the option chain and just talk about what a 50 delta option looks right on an outright trade. So I'm looking at the SPY here out to Feb 17th. 50 delta option is the at the money. It's a 692. You can see it cost about $8.70. But what does it mean? Well, to get a visual perspective of how this call option could pay you or, go against you, there's a little trick you can do on the option chain that makes it really nice in terms of showing it graphically. Remember, for every 1 point move up in the underlying, their option is going to move roughly 50 cents for you. So if you have a 50 delta option, and let's say the SPY moves up 5 points, about how much will the option pay you? If you have a 50 delta option, that moves 50 cents for every 1 point move in the underlying. If the SPY in this case, and for 1 point, that'd be $50 right on one contract because you have a 100 multiplier of the options. But if the SPY moves up, the stock itself, the shares move up 5 points, about how much should the option pay you? Right, about $250. It should move up $2.50 in price. So to see this graphically on the chart, if I take 8.5, which is roughly the price of that call, and I add $2.50, it should be marked around 11. The cool thing about options and delta is that when you get further and further in the money, or in other words, as if we realize a 5 point move on the SPY, as it works more and more for us, the delta of this 692 call is actually going to increase. All right, it's actually going to increase. So if we said a 2.5 point move or a 5 point move on the underlying should pay us 2.5 on the option and bring that option price from 8.5 to 11. If it happens quickly, it'll actually pay us more, which is very cool. And we can show that by shifting this 692 option strike up to a 687. And the way that works is we're at the money 692 right now, or it was a moment ago. If we get 5 more points in the money, this 692 call would be essentially like looking at the values of the 687 call right now, which are 5 points more in the money at the moment. And you can see the option price is up to almost 12. And that's because the delta of that option wouldn't be 50 anymore. It would be 57. So it's actually paying you a little bit more. So you can use that option chain trick to get an idea. Okay, well, if I buy a 50 delta option today and I have perfect timing and the SPY goes up 5 points, about how much can I make? You can do the simple math, 5 times 0.50, $250 on the option. But if it happens quickly, if it happens today, because of how delta increases as the position would work more and more for you, you'd actually get paid a little more. And a more accurate representation would be just look at 5 strikes further in the money. And the price of the option would increase from roughly 8.5 to almost 12. So everybody understand that little option chain trick? So as you understand that, let's do the opposite. Let's say the stock moves 5 points against us, right? And you say, well, it's still a 50 delta option. The option should lose roughly $2.50, right? Well, as the position moves against you and the option gets further and further out of the money, well, the delta exposure is going to become less and less because look at the deltas. 50 delta at the money. As you get further and further out of the money, delta, goes lower. As you go further and further in the money, delta goes higher. So your delta exposure as you get further and further out of the money is becoming less and less. So if we do the same trick, an $8.50 option right now, if the stock were to move very quickly against us, look at that. Now, of course, you're going to have to factor in, what's hard to factor in is time, the time value of the option. Hang on a second. But there's all different ways to use this to kind of prepare yourself for, where you're wrong and where you might set your targets, all based on the delta and your expected move in the underlying stock. Does anybody have any questions so far? I got to mute up and fix my speaker for a moment. I'll be right back. Okay, let's see. David says a great review. Buck says, so this relates to the 72-hour rule with options. If it's not moving in your favor after 72 hours and you're best to get out. Yes, that is Tom's 72-hour rule with trading options because, options have an expiration date. The more you if you're long an option, the more you let time go by without the stock moving in your favor, the more exposed you are to time decay. And then, some really bad things can happen to you if you're long an option and you let time decay set in. But there's nothing tricky about this. It's just a neat little option chain trick. It's about understanding what happens to the options based on delta exposure is what today's focus is on.
So here's what you should understand. If you have one contract on options and that delta, and say you got 10 contracts, you multiply 10 times that delta. Your brokerage will do it for you if you got Thinkorswim or Tastytrade, but it'll tell you how much that option should move for every dollar that whatever you're betting on or whatever you're dealing. You can set your targets and where you're wrong with options based on the delta, and it tells it right there. He's circling it right there for everybody. So that is so valuable. I didn't have this learning options, and now the computers do all the math for you. And so you can sit here and really improve your position, not just pulling numbers out of there, but pulling real numbers off the roadmap software. It says, hey, if it goes below this number, I'm wrong. And you'll know exactly where that stop should be to protect you. In a position like that, something may not can watch that position. Okay. Anyway, I wanted to spend this time going through it because I thought that
Tom, you muted up again. I'm not sure if you meant to.
it was clear to me when silver dropped 37%. I had about a third of people knew exactly what to do because I'd covered it before, and I had a bunch of new people who didn't know what to do. I said, we're going to take some time and teach people something very valuable you can use for the rest of the time you trade, knowing this concept. So that's what I wanted to make the point of. And Jonathan, great. You got more slides here?
A few more slides, just basics. 40 delta means roughly 40-cent move for every 1 point move. A 30 delta is roughly 30 cents for every $1 move. You would need 3 of those to get roughly 100 delta. Not quite, but you get the idea. A 20 delta moves 20 cents for every $1 move. You would need 5 of those to reach 100 delta. And of course, a 10 delta strategy would move roughly 10 cents for every $1 move in the underlying. Any questions about what we covered today?
One last concept we'll do the next time. We'll show you how spreads are affected by positive and negative delta, where you'll find with the spread, you got higher odds because you got less money out there getting the same movement as an outright long or outright short. And we'll spend some lessons on that maybe as early as tomorrow because I think you're ready because everybody seems to got. Does everybody want to go further with this tomorrow in train and trade? Y'all want to go further? Okay, why don't we do that, Jonathan? I'll talk to you and we'll outline it because that takes everybody to a better position, how to understand why I'm always liking spreads versus outright positions because there's a lot higher probability of making money. And it's all about putting the odds in your favor. Let's give Jonathan a hand. I thought that was outstanding for what he just did. Anybody that listens to this, and Jonathan, I want to make sure everybody can gets a recording of this. How's the best way to get a recording?
Best way to get a recording is we'll go back to the very first slide. You go to dtitrader.com/YouTube. When
Yeah,
you're there,
give me a thumbs up. I understand I'm supposed to tell y'all that to get more people there. I didn't know that. Somebody said, hey, you ought to tell people to give you a thumbs up if they like what you post. I didn't know that's the way it worked. I didn't
Yeah,
know.
you go to
I
the
need to
channel
thumb
and like
up.
and subscribe is what it is. Go to the channel and like and subscribe. Turn your notifications on, and then you'll know when time goes live. But it's every day at 11 a.m.
All right, we're going to go into what I think is something you ought to have in your arsenal. It's called Orion. So I want to listen to that and make sure that everybody understands just how powerful that concept is. It's taking all this stuff together and doing the work for you. So Jonathan, you can set it up, and I'll see everybody at 1 o'clock with our silver wheel, and I'll see everybody at 1:30